The European Central Bank have stuck to their current strategy, leaving all interest rates unchanged. I'm Elaine Stenson and you're watching Dukascopy TV. Agnes Benassi-Quer, Professor at Paris School of Economics, joins me on the line now. Agnes, the European Central Bank left interest rates unchanged. The decision to leave its main interest rate at 0.25% was expected. But do you think that this was the best decision, and what message does this give to the markets?
Well, interest rate is not enough to conclude. What is very important is that the ECB doesn't seem to be decided to introduce new measures, which can be of the interest rate or quantitative easing, LTRO, or anything that would significantly change the current course of monetary policy. And it seems to be very hesitant both on the analysis and on the efficiency of the instruments. On the analysis, so the ECB has kept repeating that there is no deflation bias, that expectations are well anchored, and there has been also discussion on the fact that, of course, you cannot predict expectation errors, but at the same time you should be prepared to massive errors in expectations. So, of course, there is a risk of doing more in terms of monetary easing, and that at the end you get too much inflation, and you have the reverse risk that you do nothing and then you end up with deflation. And the present situation where inflation is not negative but it's very low is already very, very detrimental to the real economy. If you have almost no productivity growth and no price increase, then it's very difficult in the corporate sector to keep wages just still. I think that already is very difficult, and of course for crisis countries it's very, very difficult to adjust relative prices. So I think the debate on deflation is quite misspecified, because I think there is not such thing as a discontinuity between low inflation and deflation. So I think this is mainly the analysis of the ECB seems to be that there is not such much risk, because in 2016 inflation will be back close to 2%. But in the meantime we are accumulating months with very low inflation. What the ECB could be telling the market, Draghi said that the interest rates will be kept at their present level even when the economy recovers. But he could go one step further and, for instance, say that the ECB will tolerate inflation going above 2% for a few months, because we have accumulating such low inflation. If you want a 2% or 1.8% average in the medium run, you need to allow the inflation to, at some point, go higher than 2%. And this could have a very strong impact on the market, but he refrains to say such unorthodox things. So then there is a discussion about the instruments, and we have the impression that the ECB is not so confident on the efficiency of the different instruments.
Were you surprised that Mario Draghi did not announce other measures to boost the fragile Eurozone recovery?
So I think this has to do with the lack of confidence in the instruments. First, the negative interest rate, which will not bring us very far. Second, if you pull new liquidity into the banks, this doesn't solve the problem, because the main problem today in the banks is a problem of solvency, a problem of capital adequacy ratio. It's not a problem of liquidity. So unless you announce a new LTRO with fixed rates, which will anchor the longer maturities of interest rates, they will have little impact. And then there is the question of outright purchases. And perhaps this would be maybe the next step of the ECB, because there has been a discussion about asset-backed securities and the idea of buying or refinancing or both asset-backed securities based on SMEs loans by the banks. And this has a huge advantage overcoming the problems of banks that will not want to extend new loans because of capital adequacy ratio, because of the AQR, and maybe this would be much more efficient. But there are huge technical difficulties, and maybe this is the reason why the ECB is proceeding at a low pace.
Okay, and finally, Riza Moghadam, the head of the IMF's European department, said that the ECB should cut interest rates and pump out more money, perhaps through quantitative easing. How do you respond to this?
I agree that today we clearly have the ECB appears to be behind the curve, in the sense that inflation is too low and there is a risk that it stays too low for too long. and this is very detrimental to the recovery of the economic activity. And although all the instruments we can think about, we are not so sure that they will be very efficient. Well, I think we need to at least try, because the risk is too high.
OK, Agnes, thank you very much for joining me on the line today. And that's all we have time for now, but do check back later for further updates and interviews from the team. Bye for now.